Understanding jointly and severally, a comprehensive overview. The legal concept of jointly and severally plays a significant role in partnerships, liability agreements, and financial transactions. This term serves to clarify the extent of responsibility that multiple parties have toward fulfilling contractual obligations or compensating for damages. Whether it's in personal liability cases, business partnerships, or underwriter agreements, understanding jointly and severally can help navigate complex legal waters. Definition and mechanism. The phrase jointly and severally indicates that each party in a group shares responsibility equally for the obligations defined in a legal agreement. If a court rules that individuals are jointly and severally liable, any one of those individuals can be pursued for the total amount of a judgment, regardless of their individual stake or involvement. For instance, if a couple takes out a mortgage jointly and severally of $100,000, both are equally responsible for repaying that amount. If the mortgage goes into default, the lender can pursue either individual for the entire balance, leaving the borrower who pays with the right to seek reimbursement from the other borrower. Joint and several liability in practice. Several scenarios illustrate how jointly and severally work in various contexts. 1. Personal liability. In a personal injury lawsuit, multiple defendants might be found jointly and severally liable for an accident. This means that a plaintiff can collect the total damages from any defendant, increasing the chances of recovery. 2. Partnership agreements. Partnerships often utilize the jointly and severally clause in their agreements to clarify each partner's responsibilities. For example, if one partner incurs debt on behalf of the business, creditors may pursue any partner for repayment. 3. Employment laws. Employers are typically liable for injuries that their employees sustain while on the job. In such cases, both the employer and the employee may be held jointly and severally liable for damages, depending on the state law governing workers' compensation. Jointly and severally in the securities industry. In the financial sector, particularly in underwriting, the term is equally essential. When underwriters agree to sell securities, their liability may be jointly and severally distributed. If an underwriter agrees to sell 30% of a bond issue, they are responsible not just for that percentage but also for any unsold securities. This collective responsibility helps ensure that the securities are effectively marketed and sold, distributing the risk among the underwriting syndicate. Severally but not jointly. The opposite of jointly and severally is often referred to as severally but not jointly. This means that each member of a group is responsible for their specified shares without the collective liability aspect. In an underwriting context, if an underwriter commits to buying a certain percentage of shares independently of others, they are solely accountable for their obligation without any risk for the unsold shares from fellow underwriters. Advantages and disadvantages of jointly and severally. Advantages. Increased recovery opportunities. Creditors can pursue any party for the total owed amount, which is beneficial in reducing their risk of non-payment. Clearly defined obligations. The structure sets clear expectations for each party involved regarding their liability. Disadvantages. Unfair burden on certain partners. A smaller partner may face disproportionate consequences if a larger partner defaults. It can lead to financial distress for those with less involvement. Complexity in resolution. If one party is unable to pay, it may lead to lengthy legal battles among partners over reimbursement. What is severally liability? In contrast to jointly and severally, severally liability means that each party is responsible solely for their obligations. This mitigates the risk for other partners, where one partner's failure to meet their liabilities does not impact the others. In many cases, this structure may be more equitable and manageable, particularly in partnerships where contributions and risks vary widely. Conclusion. The term jointly and severally embodies a crucial aspect of legal and financial frameworks, clearly delineating shared responsibilities and obligations among parties involved. Whether in a personal liability case, partnership agreement, or underwriting contract. Understanding these terms' implications ensures clarity and fairness, safeguarding the interests of all parties involved. Recognizing the nuances of shared responsibility can empower individuals and organizations to make informed decisions that align with their risk tolerance and financial goals.